down 88% off its high. Is Hyzon Motors stock a buy? That's the question I'm going to answer in this video, looking at the company's financial metrics and its progress it's made towards developing its trucks. Now, I will say it's going to be a little bit challenging to measure this company's progress because it has yet to start generating revenue. So let's look at some unique metrics for a company that has yet to generate revenue and is still in the pre-revenue phase. So one thing I look at is cash flow from operations. How much cash is the company going through as it develops the research and development to really get its product into customers' hands to start generating revenue. Now you've got to develop prototypes, you've got to develop working models, and Hyzon Motors has done that. It's developed trucks and it's got them into customers' hands that are trying them, they're testing, they're trying to figure out how they can benefit from using this product. So 36 million in the most recent quarter. Now keep this figure in mind because the next thing I want to look at is how much cash it has. And what we want to do is look at how much cash it's going through and compare it to how much cash it has to see how much time it has with the money on hand. And so looking at the 140 million it has on hand and comparing it with the 36 million it went through, at this pace it's got at least 2 or 3 more quarters before it runs out of its cash. And it looks like the company plans to get into production. I think the figure was about 30 trucks for 2023 by the end of 2023. So this just might be enough to get it to the next milestone. And hitting milestones is a big deal for these kinds of companies because with each milestone you hit, it becomes that much easier and less expensive to get money. Because then you can say, okay, look, we've got to this point. We just need the money to get us to that point. And then lenders and investors will be more willing to give you money because they've seen the progress you've made and they can see, okay, if we give you another 100 million, that's going to be enough to produce this many trucks and you're going to sell them and you're going to get money. And so we can see the pathway to generating revenue. And so we'll be more willing to lend you or invest with you at a lower required return on investment. So that's a key here, is to hit milestones, make progress, because with each step you make, it lowers your cost of capital if you do it effectively and efficiently. The next thing I wanted to look at is its average diluted shares outstanding. I want to see how much the company is diluting shareholders. And looking at this chart here, I don't see very much dilution in shareholders. The company pretty much has the same number of shares outstanding as it did in 2021, around 244 million shares outstanding. Now, this is important because companies that are pre-revenue and investing in research and development and getting a product to market, they tend to issue a lot of new shares, which dilutes shareholders, which then, if they eventually get to where they're generating a profit and cash flow, then that profit and cash flow has to be split among more shareholders. So your earnings per share or your cash flow per share is significantly lowered because they've issued so many shares. That's not the case with Hyzon. They haven't really issued that many shares in the last couple of years. And finally, I wanted to look at valuation. I want to see how much the company is priced at, looking at the forward price to sales ratio. So what this is doing is it's estimating what the company's sales are going to be like over the next 1 year. And then it looks like the price you're paying for the company. So at its current valuation, investors are paying a forward price to sales of 7.9 for Hyzon Motors, which is an expensive valuation to pay. If you compare it, well, I shouldn't compare it with Ford because it's a legacy automaker. Well, just to make a point, if you compare it with Ford, Ford is trading at a similar valuation, but when measuring for the forward price to earnings, which is a much more informative metric and a much more valuable metric because you're looking at earnings and not just sales. And so you could get a company with a forward price to earnings of 7.9 with Ford, or around that range with Ford, less than 10, let's say, or you can go with the forward price to sales of 7.9. Now, you got to also when you're comparing something like that, you got to understand Hyzon is going to have explosive growth, expected explosive growth over the next few years, whereas Ford, you're not going to get that kind of growth, and so that's understandable. But just to make a point there, I thought I'd bring that up just to highlight just how expensive Hyzon Motors stock is, despite the fact that the price has come down 88% off its high. It's still expensive because of what you're getting, right? Because of what you're getting. The forward price to sales really measures what you're getting for your price, regardless of the fluctuating price. Sometimes the price can increase, but you're getting a better value because you're getting more for the price that you're paying. Okay, so that's important. So to answer the question I posed in the headline, is Hyzon Motors stock a buy? I would say no. For me, it's still too early. I would like to see more development from the company, more sales and orders and hard deadlines in terms of delivery dates and customer orders and revenue and cash starting to come in. Then I can start to consider investing in this innovative growth company here. But for now, I would say no, not a buy just yet. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.